I'm Charlotte McLeod with investingnews.com, and here today with me is Jeff Clark, metals and mining analyst at thegoldadvisor.com. Thank you so much for joining me.
Great to be back with you, Charlotte. Good to see you.
Yeah, we're catching up after a little while, and where I thought we could start, so we're here at the New Orleans Investment Conference. You've already done your presentation, but I think, sadly, I was on the plane when it happened. So I know it has a really exciting title, and your presentation last year was actually one of my favorites. So if we could start by talking just some highlights. I don't want to make you do the whole thing, but some highlights.
Well, the title was "Are Juniors Dead, or Are 10 Baggers Going to Become 20 Baggers?" And the reason I asked that is because I think, as most investors know, juniors are so oversold. They're dramatically oversold. Just as one example, there's a company that has infrastructure already on place at their project, and it's worth 4 to 5 times more than their current market cap. And that excludes the resource, all the drilling they've done, the growing. So this is the kind of thing that I'm talking about. Things are so oversold that when gold and silver resume an uptrend, when sentiment changes in the junior sector, I do expect there to be some big gains made from current levels. So I asked the question, which is kind of daring, but is this a 100-year opportunity in mining stocks? The only other time I can find where mining stocks were so depressed was the nuclear 90s, they were called, because gold and silver went nowhere. Mining stocks or miners couldn't make a profit at all. It was very depressing for a period of time there. Stocks were very undervalued. We know what began to happen in 2001. It was basically an 11-year bull market. So, I think that for any stock you don't own that you like right now that may be dramatically oversold, I know people are tired of hearing the word opportunity, but I do think, think cycle. That's another thing I would like to point out, not to keep rattling on here, but gold stocks and mining stocks cycle. And I have a chart in that presentation. When the video comes out, you'll see that, mining stocks oversell dramatically, 50, 60, 70%. And one example was 90%. But the next upcycle more than made up for it. The one that sold off 90%, the next upturn was over 500% gain. So these things cycle. We've been in a down cycle. Sentiment is bad. But at some point, this is going to reverse, and we're going to have an upcycle in gold. And I think the gains in the miners, especially the juniors, are going to be, frankly, spectacular.
Yeah, and you anticipated one of my questions. I was gonna ask you exactly that. Looking at sentiment right now, I know it's quite negative. I was going to ask you if you could contextualize it into, the past. So the 90s is another time when this was quite bad.
You have to go back that far to really find a depressing, some people will point to 2006, but, gold was basically flat. It was down a little bit, but the miners didn't go anywhere, and they were down some. But this is much worse than that. So you have to go back to the 90s and, I can point to some spectacular gains that were made coming out of that. And there were some that were made even in it because they were around a discovery, like Snowline Gold today. That stock's gone 10x since I recommended it 2 years ago at this conference. And that's a good example of something that can still run because they made a genuine large gold discovery.
Right. And, I think you're so right to say that there is so much pessimism right now. One of the things I wanted to ask for you is, how do you, in this situation, how do you reaffirm that the stocks you have are things you want to hold, or decide, all right, it really is time to get out?
That's a great question, because unfortunately, there are some stocks in people's portfolio, even in mine, that I have to ask myself, okay, is this stock really going to participate? Are they prepared to participate in the next run in gold? And sometimes that answer is no. And so it means you might have to sell a stock that is down dramatically. But what I'm looking at is the 2 C's. Do they have cash, and do they have catalysts? They have to have cash in this market. If they don't, if they can't raise, or they can't raise enough, that's not a good sign. And of course, they have to have catalysts. They have to be actively moving their projects forward. And I don't mean just reporting on the AGM meeting. I mean actually drilling and growing a resource or making a discovery. They have to be pushing forward. If you don't see that, unfortunately, that may be a stock that may not participate in the next run. So, that would be maybe one you might lighten up on. Maybe you don't sell the whole thing. That's another option, but you lighten up on it or something like that. On the other hand, there are some that, like the stock I pointed out earlier, the company that it's a dramatic undervaluation. Even to get back to fair valuation would imply more than a 5x. So there are opportunities out there that one can take advantage of if they have cash, and you don't want to go overweight, too many mining stocks, and don't mortgage the house. But if you can, there are still opportunities out there.
Yeah, and one point you made there is something that I keep being reminded of here, and I think it's important for investors, is you can sell a little bit. You don't have to go all or nothing on your stock.
That's a great point. Yes, I really try to emphasize that. Recently I recommended that that you could take profits on a stock that had gone was up 700% in our portfolio. And, some people did do that, but I really emphasize, look, we're taking profits. We're not selling out. There's a difference. You're just scraping some off the table. And for some that are down and you don't think they're going to be good, if you want to hold on to half of it and sell the other half, that's an option too. But yes, taking profits is very a great strategy when you get there.
Yeah, definitely things for people to think about. And okay, so if we look over to the market, so one statistic we've talked about previously relates to the Fed, and I'm going to check my notes here to make sure I get it right. So you've told us the last hike in a cycle typically comes about 5 months after the first cut.
Yes.
Am I getting that right? Okay,
Yes.
so, and we've said before, this is not actually very long, and we seem to, that last hike seems to be getting pushed further out, but perhaps we're there, or maybe we're getting there quickly. So, any thoughts there on when we might get that first cut?
Well, it would occur historically, on average, just 5 months after the last hike. So we have to see if there's going to be another hike or not.
Yeah.
I kind of doubt it, but who cares about my opinion? But I think they'll probably pause because of the CPI is coming down. Most parts of it are. So whenever that occurs, historically, we measure them going back to the 1950s. On average, the first cut is only 5 months after the last hike. So when we see what we believe is the last hike, whether that's already occurred or it's coming soon, there's going to be probably a cut in 2024. Maybe they're raising rates so they can cut in the recession, because the recession's, that's pretty clear. The recession's coming, right? So
We've heard that before, though.
yeah, it's a timing thing, though. The negative yield, the yield curve being negative for almost 2 years now. But a lot of, if you look back historically, the last 7 recessions have been predicted by a negative yield curve. But they've occurred anywhere from like a few months to up to 2 years later after it's first gone negative. And we're about at that point now. So, I think it's going to be pretty clear we have a recession either very soon or in 2024. It's probably the most telegraphed recession in the history of mankind. So I don't know how bad it really will get, in the markets when everybody's expecting one. But we'll see. If it's a hard landing, that's a different story. That affects a lot of things. But the good news is gold has risen in all of the past 8 recessions but 2. It's risen in 6 of 8, and the 2 it declined were single digits. So we can expect gold to be reasonably strong during a recession. And gold stocks, by the way, I know I'm going on long here, but gold stocks, I looked at those during a recession, and they rose in 5 of 8 of the recessions. They actually only fell in 3 of them. So this market, our market, the gold market, may be coming upon a strong point right now, because common stocks are probably going to fall. The economy is going to be depressed, but gold and gold stocks have a reasonable chance, based on history, of doing well.
Do we know in those cases where gold and gold stocks fell in recession. What was going on there?
Well, this is going all the way back to the 60s.
Sorry to make you go into history.
Or I think early 70s is when we started measuring it. And the gold stocks, when the 3 times they did sell off, it was significant. It was, 20, 30% type of thing. But from 2000 to present, I believe they've only sold off once out of the three recessions we've had. But the circumstances were always different, it's hard to, you have to go and measure each one. But historically, there's an average there that gold typically rises, and gold stocks rise more than they fall during a recession. That's the kind of the message.
Okay, yeah, you always want to look for that unifying factor, but it's not always there. So yeah, let's look a little bit more at what's going on with the gold price, because although we're sitting at these historically high levels, I think people are looking for it to go higher, and they want to know what's going to put it there. So recession is one thing that could do that. Other factors that you're watching when it comes to gold?
You know what? I went back and looked at all the crises we've had in the past 50 years, I believe. And there was some type of crisis or event, negative event, roughly every 3 years. And I started looking at them, and I realized that half of them were black swans. They were things that people were not expecting. How many people expected the pandemic? Some people called for the crash in '08, but most people did not expect it. So it could be anything, and it could be something that we're not really prepared for. Obviously, the U.S. dollar is part of this, but you see the U.S. dollar go up and gold rise at the same time when Israel was invaded. So, it depends on circumstances. But I do think the rate hike cycle ending will be positive for gold. So you could have a trifecta there. You could have a recession, which is good for gold. You could have interest rates not rising anymore, maybe falling, which would be good for gold. You could have them resume money printing, during a recession. If it's bad enough, they'll do that. That's positive for gold. So, there's a trifecta of things there that could be positive. If the war in Israel ends or subsides, we'll probably see a little bit of a pullback. Gold always rises in geopolitical conflicts like that, but it tends to soften after it's over or resolves or, weakens or whatever the case might be. So.
Yeah. There's so much going on right now. I feel a little bit bad asking this, but if you were going to put a price target or a place you think gold is going toward, let's not say toward the end of 2023, in 2024, okay, would you put a number on where you see gold going?
Oh, I think that's an easy call. New all-time highs.
Okay.
I can't see the gold price staying here. Again, it'll probably weaken if the Israel thing calms down. It'll go higher if it gets worse. But that's a short-term issue. In the bigger picture, there's, like you say, there's too much going on to really say that gold's gonna go down. There's a lot of catalysts that are in place there, and again, it could be something that people aren't expecting. Everybody's expecting a recession. Everybody's expecting the end of the rate hike. What if it's something else that comes out of the blue and surprises Main Street and Wall Street? That's very impossible based on history, and that could be good for gold. So it'll make new all-time highs in 2024. I have confidence of that, but I'm a person who doesn't really want gold to go to $10,000 an ounce, because of what it implies. You might be rich with your gold, but the rest of your life is falling apart because of what's happening in the economy. So I hope that doesn't happen. But, I think gold 2,500 to 3,000 next year is, very attainable.
And, okay, so what happens to silver in this scenario? Poor silver that is I don't want to say it's languishing, but, gold near its, okay. We'll go there. We've got gold near its all-time high, and you're right. A call for all-time high in gold next year. That sounds pretty attainable. Meanwhile, silver much below its all-time high. So, what's the story with silver?
So we know also from history that silver tends to lag when gold takes off. Silver doesn't necessarily take off; it tends to lag, and be stagnant. That's very common. That's its DNA, if you will. So it could be possible where gold makes a nice move and silver lags for a while. That would not be surprising. So it would, you can't get upset about that. Like, what's happening? Because history shows that it eventually catches up. It ignites. It catches up to gold and passes it on a percentage basis. So I don't know if that happens in 2024, because I think the next bull run in this cycle is going to be significant. It's going to be strong. So I think this could be a 2 to 3 year bull market easily once it makes new all-time high, once it breaks out. And silver will come, but it'll have a delayed reaction. The fuse there is a little longer than the fuse on gold.
Yeah, just another point on silver, because I know you were just at an entire silver-focused conference, so we can talk a little bit more about that. It follows many of the same factors as gold, but it's got its own supply and demand drivers. And we had the big deficit last year. It looks like we're set for another big one this year. I was looking at the Silver Institute prediction a while ago. So that is interesting to me, that there's this large deficit and still the price is kind of where it is.
Yeah. I have a great chart of supply and demand each year. And supply always meets demand or is a little higher than demand. And then all of a sudden, last year and the year before, we had an annual deficit. In other words, demand was much higher than silver. The projection this year is it'll be high again. Not as high as last year. That was like, headline news. But this one will be significant. If you add up all the 3 years of the annual deficit between supply and demand, it's 430 million ounces of silver more in demand than annual supply is providing. 430 million ounces in 3 years. I mean, that's almost 1 year's of annual supply. So it's very significant. Meanwhile, you have new uses for silver coming out literally every month. Every month, Silver Institute puts out a great monthly newsletter, and they outline where all the scientists and chemists and all that are finding new uses for silver. So industrial use is going to grow. Throw in some type of monetary or financial crisis, gold rising, silver is going to go. So,
yeah, okay. And so I think I have some fun questions. I've been calling them fun. We'll see if they're fun. So if you look out, say 5 years into the future, and you had to choose one asset that you want to hold from now till these 5 years in the future, what would it be? It doesn't have to be gold or silver. It can be whatever you want.
That's easy. Gold. It has to be gold. I think it's going to be the asset of the decade. I don't, silver will be a runner-up. It may even pass in percentage terms, but silver is a safer asset. Gold's a safer asset to hold. So, I think it's the asset of the decade. That's one of the themes on our site. I would have to own gold. If I had to only own one thing, it would be gold.
Yeah, and the follow-up was going to be, does it change if we increase it to 10 years? But if it's of the decade, then there you go.
It depends when. Pardon me. It depends when we have the dollar crisis, because the debt in the U.S. and a lot of other countries, but we're the dollar is the king of the world, right? So it's when that goes. So if that happens within 10 years, it would still be gold. I may re-enter the crypto market at some point. I may re-enter the stock market at some point. I may want to buy real estate at some point. The timing for those, in my opinion, is not now. You need to be centered around a financial asset that can withstand the kind of fallout that we could have in the economy and the markets with the Fed, et cetera, et cetera. So when the dollar goes, that's the answer to that question, is when the dollar goes. If it goes, within 10 years, I would still have to own gold. If it goes within 5 years, I might change to something else in that second set of 5 years. So
there we go. Okay, that's a complex answer. Okay, and my next final fun question: do's and don'ts for investors heading into the end of the year and perhaps into 2024.
For gold?
For resource investors in general, or you can interpret it as you like.
Yeah, I think you need to look at companies that have the 2 C's. That's what I'm doing. I have a thing on the site that the 3 legs of the stool that you need to look at to evaluate companies. I think the opportunity is tremendous right now. I don't know that the bottom is in for the mining stocks, but when sentiment turns, you're going to see doubles and triples like really quick, and they'll still be undervalued, you know. So clean up your portfolio, get rid of the ones that you think just aren't going to do it. A fun exercise is, what if I told you you had to cut your portfolio in half? All the mining stocks you own, you have to cut it in half. Now, I'm not saying you have to do that, but I'm saying going through that exercise really helps you crystallize who are the best in my portfolio, the most likely to participate in the next uptrend. That's a healthy exercise to do. So my message is, be prepared, prepare yourself and your portfolio for the next run in gold and silver.
That does sound like a fun exercise. Well, a certain definition of fun for sure.
Yeah.
Okay. Oh, this is really good. Did you have, I think, does that wrap up your final thoughts? Anything you would add?
Well, I'm happy to say that, my book just came out in paperback. So Pater is out in paperback now. So you can order that on the website. There's a link to that under thegoldadvisor.com/Pater. You can see all the ways you can buy it there. Digital, ebook, Kindle and that. No audiobook yet. I have to get through and done with all my surgery before I do that. But I will do that. But yeah, it's available in paperback now.
Perfect. Okay, and we can leave a link to that as well in the video description so people could see it. Okay, thank you so much for sitting down to go through what's going on in gold and silver. Always really good to talk to you.
Great, Charlotte. Thanks for having me, and look forward to the next one.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Jeff Clark with thegoldadvisor.com. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.